range of the market improvement has not been that broad. So it's been kind of a narrow market increase. But for the most part, it's been pretty positive. And so ultimately what is occurring is that people just don't believe that this is a real market rally. They don't believe that the market is actually reflecting some sort of significant fundamental improvement in the condition of stocks or the economy. They believe that the market is sort of living off of it's living off of some sort of fantasy that things are going to get better, right? And so here's the deal. Right now, the stock market is as a result of doing so well, so recently, I think that you could end up seeing some sort of correction in the near future, just because some things have done so well. The stocks that are probably going to end up causing you the most drama are going to be companies that are that benefited from the AI boom. The AI boom led to, I read an article about it this morning where they were basically saying that even though most companies have positive earnings surprises, these positive surprises were not sort of greeted by the stock market in the way that they would normally expect. Like typically the stock market, has a big jump, or a company stock has a big jump when it has a positive earnings surprise. In this particular case, it either had no jump at all, or maybe it was even a little bit negative, especially if they did not make their sales numbers. So what does that mean? Well, that means that the market is kind of saying, especially for AI stocks, that they already kind of gave you everything that you're going to get for a while. It's almost like I have a cousin whose birthday is like right after Christmas. And anybody know what I'm talking about? When you grow up and you ever feel sorry for like your friend or your relative where their birthday was right near Christmas? What happens when your birthday is right near Christmas? Answer in the chat. What tends to happen if your birthday is right after Christmas? Do you get better gifts, or do you not get anything? Right? You don't get anything. You get, or they give you something for Christmas and they say, "Oh, that's this is your Christmas and your birthday gift." And you're kind of mad because you're like, wait a minute, no. Those are two separate holidays. Those are two separate issues. You become like a lawyer, like a little 9-year-old lawyer. Like, no, this is a whole separate issue. This is a different issue, right? But it doesn't matter. They kind of connect the two. And so in a way, when a company has had a positive earnings announcement this year, the market's basically saying, no, you already got your birthday present. Your birthday present was the boom in this particular stock when the whole AI thing started, right? So effectively, that's what the market's kind of doing, which is leading a lot of people to feel that this is a market that's sort of waiting for an opportunity to decline. That's the point I'm getting at, that this could lead to a drop in stock prices. This could lead to something that is going to sort of lead to cause a pullback, because there aren't a lot of fundamentals driving this increase in stock prices that we've seen lately. There's just, the fundamentals just aren't there. So what I would say to you is that maybe, again, this is not investing advice. This is just what I'm doing. I'm selling some stocks off the top, number one. Number two, I am also buying some put options on the stocks that I have that have really done extremely well. And the put options are basically insurance. They can protect you from the downside. I'm getting a little more bearish because I feel like this year has just been an absolute gift in the stock market. I mean, everything's been going up so much. Now, in terms of good news, one significant piece of good news that was recently announced was one of the presidents of the Federal Reserve, I think in Philadelphia, basically said that that they're probably not going to increase interest rates the next time that they meet. That could be a positive catalyst for the market. And I'm wondering if he's making this announcement just as one member of the Fed who just happens to have an opinion, and it doesn't matter because the board of governors is more than one person, or if he's making the announcement because they're trying to leak out the information so the market doesn't overreact when they actually make the formal announcement. Sometimes what the Federal Reserve will do is they will slowly but surely let the market know things, almost like if you have really bad news that you want to give your parents, maybe you take your time and you give them like a little bit at a time. And after a while, they eventually, kind of know something bad is coming, so they're kind of prepared for it. Or you say, okay, mama, sit down before I tell you that my girlfriend's pregnant or whatever, right? Maybe I'm telling myself that's my life story. And so to some extent, like there's evidence to say that when you tell the market what's going on, if it's bad news, you want to release it slowly, even good news or bad news. What they're trying to do is maintain an orderly market and sort of keep things fluid and smooth. So I think the Federal Reserve is already telling you that they're not going to increase interest rates. That is a good thing, because I fully expect that as inflation keeps dropping, or we have what's called disinflation, not deflation. Deflation is when prices go down. Disinflation is when prices are still going up. They're just not going up as fast as they were before. Okay. So let me know if you understand the difference between those two things. So you have significant amounts of disinflation, which is good because inflation was the big beast that was causing them to wreck the economy in the first place. Now they're realizing that they've got it under control. So they're going to slow down the hikes. But then eventually what's probably going to occur is you're probably going to see some sort of negative event in the market that will end up pulling things down. Now, in fact, I'm looking here and I see that today the market is down 300 points. And actually, one thing I wanted to talk to you guys about, I'm gonna share this article on my screen. Hopefully, you guys can see it. Give me a second here as I pull this up. Credit card debt. This is interesting. So I'm pulling this up right now. Here you go. Okay, so this is CNBC. It says credit card balances jumped in the second quarter and are above $1 trillion for the first time. So, and this is not a surprise because basically, I mean, you had the pandemic, right? And people have spoken extensively about the resilience of the American economy. They've just sort of ranted and raved about how strong the American economy has been despite all the challenges. Well, how does the economy remain resilient if people don't have any money? I mean, they spent up the PPP money, but they still kept spending. I mean, how does it remain resilient? Well, people go into debt. Think about this. I mean, you have really strong consumer spending, lower paying jobs. How are you spending money when you don't have enough money to buy all the things you afford when you max out the credit card? So as a result, the total credit card indebtedness increased by $45 billion in the April through June period, an increase of more than 4%, and it's just above the $1 trillion mark. The Fed's measure of credit card debt 30 days or more late rose to 7.2% in the second quarter, the highest rate since the first quarter of 2012. So read that again. The Fed's measure of credit card debt 30 days or more late. So that means that people are paying their credit card bills late. Do you follow me? Give me a yes for following this. That's a big deal. That's like you're sitting on top of a balcony and you're loading fat people on the balcony, right? More and more fat people on the balcony. And then you start hearing the balcony crack. That's the balcony cracking, right? And that means you keep on loading people on the balcony, you're going to have a disaster. So effectively, the fact that this number has increased to the highest levels since the first quarter of 2012. Okay, that speaks to the fact that your number one economic catalyst that's been driving the economy even during downtimes is under threat. That says that consumer spending, which has really been what's helped you guys make so much money in the stock market, could end up declining, which would impact corporate earnings, which impacts your stock prices. So this is something to watch. It's not something to freak out about, but I'm looking here, and even today, it looks like the Dow has it says 400 points now. I don't know if that's changed since I first started talking about it or not, but you could be in the middle of a major correction. Is that worthy of a panic? I don't think so. I think long-term, if you're a long-term investor, all this stuff is not important. It's important, but not that important. But if you're looking at short-term fluctuations, I want you to get ready because you're going to be on a roller coaster ride. So let's read through more of this article, and then I want to answer some of your questions. It says Americans increasingly turn to their credit cards to make ends meet, heading into the summer, sending aggregate balances over $1 trillion for the first time ever, according to the New York Federal Reserve. Total credit card indebtedness increased by 45 billion in the April through June period, an increase of more than 4%. That's the total amount owed to 1.03 trillion, the highest gross value in Fed data going back to 2003. So Americans have never had this much debt before. That's a problem. Debt is not a bad thing all the time, right? So sometimes, I'll hear someone like a Dave Ramsey say that you want to get out of debt completely. And really, debt is not the problem. The problem is when you have a lot of debt and you're not using the debt to make money. That's when debt becomes an issue. Debt is not an issue in itself. Debt is a wonderful thing if you have a good investment opportunity. Like if I think about this, if I had a business deal I could make that would make me an extra $80,000 right now, and I had to borrow $30,000 to take that deal, but I've already got my customers waiting and the risk is very low, then I'd be a fool not to take that debt, right? And so I would encourage you to not ever think of debt as always a bad thing. The problem debt is consumer debt, though, because consumer debt typically comes from maxing out your American Express card or whatever because you went shopping a lot or you went on a lot of vacations and stuff like that. And there's nothing about shopping or vacation that's going to give you a direct financial ROI. Okay. So basically, this consumer debt's reached $1 trillion. Another bubble that could burst that's also a problem area in debt is student loan debt. Student loan debt is higher than it's ever been. They're never going to forgive the student loan debt. And my little conspiracy theory is that part of the reason I think they're never going to forgive it is because they want you to go back to work. I don't think they really want you to be so financially free that you don't have to go and work for some company, because how else is the American economy going to prosper? That's why I saw a lot of interviews with billionaires on TV who were shaming people for not wanting to go back to work or not wanting to be in the office 5 days a week, things like that. So here's what else it says. It says the increase in the category was the most notable area as total household debt edged higher by about 16 billion to $17 trillion. Also a fresh record. So not just consumer debt, credit card debt has hit $1 trillion, but there's 17 trillion in total consumer debt or total household debt. Sorry. As card use grew, so did the delinquency rate. The Fed's measure of credit card debt 30 days or more late rose to 7.2% in the second quarter, up from 6.5% in Q1, and the highest rate since the first quarter of 2012, though close to the long-term normal, central bank officials said. Total debt delinquency edged higher to 3.18% from 3%. So you have a couple things happening here, right? One, you've got credit card debt, hitting a record high. Two, you got household debt hitting a record high. Three, you have student loan debt hitting a record high. Four, people have to start paying their student loans again. They're not going to be in forbearance. I think it starts in September. And then five, which isn't discussed as much as it should be, is that you have a problem in the commercial lending space. In commercial lending, a lot of leases are going to come up, and a lot of commercial lenders are not going to loan money to refinance, some of these commercial property spaces, and a lot of people are not going to renew their leases. So a lot of these companies that operate in the commercial property space are going to hit an economic downturn, and that's another bubble that could end up busting the economy. Now, what happens if one of those bubbles bursts, or there's a liquidity problem, or there's an economic downturn? Well, that's when the Fed starts kicking in. That's when bad becomes good and good becomes bad. That, it's kind of crazy when we sort of have this government hand in the way the economy runs, because it does weird things like that. Like, for example, there's no reason why people should have been making extra money during the pandemic. I mean, that's supposed to be a bad economic time, but they did so much, they injected so much economic medicine that it became a good time, right? We were high off the drugs. But then, just like any drug, there's the hangover, or a lot of drugs anyway. So when they put the economic crack into the economy, we had the high that occurred in 2020. 2020 was a great year. It was a horrible year for some people economically, but it was a great year for a lot of it. I knew people who made more money in 2020 than they'd ever made before. And then now you're sort of dealing with the hangover, which was the inflation and everything else. And so now when you have the economic downturn that's likely to occur, because I think one of these bubbles is going to burst. That's my point. I think one of these things is going to give, and it's going to show in some major headlines and some companies not making their earnings expectations. And you're going to see a precipitous decline in stocks. Well, at that point, that's when the Fed kicks in, and instead of increasing interest rates, they start lowering interest rates. So the same way lowering interest rates, the same way increasing interest rates killed your stocks. Well, guess what? Lowering interest rates is going to boost your stocks up, and because this economy takes care of rich people first. If you're an investor consistently, you're considered among the rich people, not because you're rich, but because you're an investor. So it's not because of how much money you have in your bank account; it's because you're doing what rich people do. Because stock market participation is the number one factor that determines whether somebody is going to be middle class or wealthy. That's why if someone tells me that they're not invested in the stock market, they're probably not wealthy, right? Doesn't mean that they're destitute. It just means they're probably not wealthy, because most wealth gets created in that particular way. All right, so let me read more here. Oh, by the way, I meant to mention to you guys, I got away from like YouTube and all that stuff and Facebook, and I created a Black Investors channel on Telegram. So actually, if you go to drboycetelegram.com, you can connect with me there and follow that channel. It's a private channel. I like Telegram because they're not going to censor us. They're not going, because y'all know me. I like to talk about everything that's Black, especially things that are Black and economic. And there's so many different angles in which our economics are affected. I like to talk about all of them. Sometimes it's not politically correct, but I like to sort of analyze things in whichever direction it goes. So Telegram lets us do that. And it also allows us more direct access to you. So we have millions of followers on Facebook, over 1 million followers on YouTube, but those platforms kind of cut off the number of people we can reach, but Telegram lets us reach directly to you. And so if you'd like to join our Black Investors group on Telegram, just go to drboycetelegram.com. That's drboycetelegram.com. So we're always, sort of building, if you just as a note, if you ever build a business or something, you want to have multiple platforms. You don't want to be in one place. So we're in like 80 places. All right. So, and let me keep going here. All right. So credit card balances saw brisk growth in the second quarter, says Joey Scaley, Regional Economic Principal within the Household and Public Policy Research Division at the New York Fed. And while delinquency rates have edged up, they appear to have normalized to pre-pandemic levels. Okay. So delinquency rates have edged up but they normalize. Okay. Interesting. Fed researchers say the increase in balances reflects both inflationary pressures as well as higher levels of consumption. So people are buying more, and there is inflation. So they're buying more and it's costing more. That's what it's saying there. Let's see here. The central bank also said the demand for card issuance has eased, which has come in conjunction with banks saying that credit standards are tightening. So banks are tightening the standard to get credit, and people want less or want fewer credit cards. Interesting. Okay, I don't know what to make of that, but I'm gonna think about that. Debt across other categories showed only modest gains. Newly originated mortgages rose by $393 billion through total mortgage debt, though total mortgage debt nudged lower to just over 12 trillion. Auto loans increased by 20 billion to 1.58 trillion, and student loans decreased from 1.57 trillion ahead of the lifting of the moratorium on payments. That's a big deal. People that have to start paying their student loans don't have as much discretionary income to spend. That's going to cause some economic challenges. Now, I will pop in my face again so y'all can see me and I can smile at you and wave at you. Now I'm gonna turn my video back off again because I have to save the Wi-Fi, because this Wi-Fi is kind of flaky. It's that old Danish Wi-Fi. It's dang Danes and they dang Wi-Fi. All right. So anyway, let me, just kidding. Danish people are cool. All right. So let's see. Errol says, what do you expect the CPI and PPI reports to be? Gosh, Errol, I wish I could tell you. I mean, the general trend appears to be down though. PPI, CPI, those are consumer price index and producer price index. I think the inflation numbers are going to keep getting better. That's what I believe. That's what I'm seeing. So I think that inflation has been whipped pretty good. It infuriated me a little bit because it was very predictable that we were going to have an inflation problem, because they were printing money and spending so much money. And the pandemic was a problem, but to some extent, someone could argue they overreacted a little bit, because, it wasn't something where we would simply sit around and do nothing. Like the South benefited tremendously financially from the fact that they didn't completely shut everything down in the pandemic. Now, sure, you might not agree with how they approached it, but my wife and I went South and spent a lot of money that we were going to spend in the North, because we didn't want to keep being shut in forever. And we had younger kids who couldn't understand why they had to be locked in the house too, and they couldn't do anything or go anywhere. So we went down to Florida 2-3 times, and we got married in Texas because I didn't want to lose money on my deposit by trying to get married in Chicago. So what happened was billions of dollars shifted from the North to the South. And so the North actually, for the first time, contributes more to the U.S. GDP than the South does, because in the South, they just kind of kept on going. They didn't sort of kill everything. Even in college football, you saw the Big Ten shut down because of the pandemic, whereas the SEC was like, no, we're still going to play. And then eventually the Big Ten was kind of shamed into joining, so it was a mixed bag. And I think the big problem they're going to have when the next pandemic comes up, because there's going to be another one, I'm sure, is they're going to have a problem. They're going to have people that are not going to believe you, because there was so much faith lost in government institutions because people were being censored and everything. And then I think also, so because they won't believe you, they're not going to take it seriously. And if it is a serious virus that could really hurt a lot of people, a lot of people are going to get hurt because they're not going to pay attention. And then also you're going to have less economic ammunition to deal with it. We kind of shot every bullet out of the gun, by going just trillions in additional debt. And the thing about debt is that the debt levels in the United States government tend to go up. They don't go down. So now that we have all this extra debt, what if something horrible happens tomorrow? What if we have a war or something crazy goes off? Our debt capacity is kind of maxed out a little bit. So anyway, let me get back to your questions. Okay, Keith. Good day, Dr. B. I hope all is well with you. Can wealth be accumulated by just buying call options? You can build portfolios with options. In fact, they have mutual funds that's what they do. You can buy shares in the fund, and they're literally, their whole fund is built on buying options or selling covered calls. Like, there are funds out there like that. So the short answer to that is yes. Now, the longer answer is that if you are buying call options, kind of doing what a lot of people do, which is basically buying calls that are out of the money, you're probably not going to grow a whole lot of wealth that way. You're going to end up losing a lot. Now, you could do things like, like the stock replication strategy, which is where basically you're buying options, but you're reducing the risk so much that it becomes almost as safe as buying stock. And that might actually give you a chance to really build some wealth. So like that was one of the things I did. When the market was really down, there were strong companies that I really believed in that I knew eventually were going to recover. I knew they weren't going to go bankrupt. So I knew that the long-term trend for most stocks on most major American companies is positive, and they know how to make money. Companies like the Apple and Microsoft and stuff like that. And so what I did was I did what is called a stock replication strategy, which allows you to basically get the effects of owning stock without actually having to buy stock. So you could do a stock replication strategy where you buy a deep in the money call option. Like, you just pick an option where maybe the strike price is, let's say the current price is, I don't know, 80, but the strike price is like 60, right? And then instead of like actually buying stock where you own it, or you can own it forever if you want, and you pay full price, you're paying a lower price, and you don't own it forever. You just have it for a long time. So you give it a way far out expiration date, like a year and a half, 2 years, long enough for the market to recover. So in a way, it's almost like the difference between, it's like if somebody needs a place to live, and one guy says, yeah, I'm going to go buy me a house. And in which case he has to put up all the money to buy the house and get the approval for the loan or whatever, or pay the full price. Whereas somebody else might say, I don't really want to buy a house. I want to go and get me an apartment, and I want to rent that apartment for 2 years, right? So they both have long-term options. They're both going to be somewhere for the next 2 years. It's just they went about it in different ways, right? So because for some people, 2 years from now it might as well be forever. So basically, with a stock replication strategy, that's what you do. You buy deep in the money call option, and effectively, without me going into too many of the details, it acts a lot like owning the stock. What's the benefit? Well, the benefit is that even though you're paying a premium, a time premium, right? You're paying extra for time. Remember, in finance, time is money. Literally, time costs money. So when you buy an option that has a further strike price out or further expiration date, you got to pay for that extra time. Just like if you rent a hotel room and you say, I want to stay for 6 months, they're going to charge you for 6 months of their time, 6 months of using their space. But some people would rather pay that than actually take on the obligation of buying an entire house, right? So you're going to pay the premium, but still the amount you pay for the stock to do a stock replication is lower than the amount you pay for actually owning the stock. So there may be a stock like, I don't know, let's say it's Disney or something, and the price is $200 a share on the market. You could maybe do a stock replication where you're getting something similar to the shares for like 120 or something like that. So you can put more capital out and still get the same effects as the stock, almost like a cheap man's liquor, right? Instead of buying the $100 wine, maybe you buy the $25 wine. But just remember though, everything has a trade-off. So being similar to the stock is not the same as actually owning it. And so there's a little more risk involved though. But that's what I did with Chipotle, Amazon, and what was another one I did it with? Chipotle, Amazon. There was one more, I can't remember. Anyway, Chipotle and Amazon, I did it that way because I knew that Chipotle wasn't going to be down forever. I said Chipotle is cheap right now. They're not going to stay down because they know how to make money. And Chipotle actually, I was a little mad because Chipotle actually rose faster than I thought it would. I gave it a year and a half. The expiration date wasn't until June of 2024. Chipotle literally shot up like crazy over the next like 6 weeks. So, but I have to sit on these positions because I have to sort of allow what they call the time decay to occur. Because actually, and really to be more specific, I did a call spread. So it's a long-term call spread, but don't worry about that. Don't worry, because some of you may not know options. If you want to learn about options, I have a good masterclass. Feel free to go to stockoptionsmasterclass.com. If you go to stockoptionsmasterclass.com, it's all there. And I break down all these strategies and everything else. I think learning options is really, really good for investing. It gives you more options, pun intended, when it comes to your investing, right? As opposed to just buying the stock and waiting for something good to happen. All right. So as I answer more of your questions, let me see here. I'm also going to read what's going on in the world right now, and we're going to kind of interpret that. Alicia says, "Good day, Dr. Boyce. I love this and what all you do for the community. Thank you. Awesomeness. What do you think are MLPs, master limited partnerships? Are they a good investment with any of the oil companies? Approximately 30 of them approved." That are legally approved to pay out profits to unit holders yearly. Apparently, payouts are better than dividends. There was a statute 26-7704 approved by President Reagan, and unit holders have been getting payouts for 30 years already. What is meant by exist outside the stock market, and is that safe? Well, the short answer is that it's outside the stock market. It's not so much that it's automatically unsafe, Alicia. It's more, I like that name. That's my wife's name. It's not that it's automatically unsafe. It just means that it's more like buy at your own risk. It's like if you go to a country and they say, if you stay in the touristy areas, we can guarantee your safety. But if you go out on your own, we can't guarantee anything. So when you're sort of outside the protections of the market, you do kind of run into stuff that gets a little bit weird, almost scammy and strange. And even worse, the worst part is not so much the fact that it might be a problematic investment. Usually stuff that's like super complex and they sort of convince you that like this is the secret investment method that the government doesn't want you to know, and people are making all kinds of money and it's guaranteed. That's the stuff you got to be careful about, because ain't no such thing as a guaranteed investment. You can lose money. Well, sorry, let me say that again. That was such a bad statement for me to make. There is such a thing as a guaranteed investment, but you're not going to make a ton of money. So I said that completely wrong. That's totally wrong. There are guaranteed risk-free investments, but you're not going to earn a ton of money. Risk-free investments are things like T-bills and stuff like that. Not real estate tax certificate tax liens and and all that. Yeah, I'm not saying that that's bad. I'm just saying that if you're in over your head and you're confused, be really careful. And if you want to try it with little amounts of money, because another problem that you'll run into that isn't discussed enough is a liquidity problem. Sometimes you want to get your money out. Sometimes you want to, you make your investment and you want, you might need your money for something, and you don't want to feel like your money's just locked up in this thing that you put it into, 4 or 5 years ago. You may need to get it out. Now, so the beauty of the stock market, part of it is that you can go and sell your stock. You can buy it at 1 o'clock and sell it again at 2 o'clock. And there will typically be a buyer that is available for you. So I don't know the specifics of the laws you mentioned and things like that. I do know that with real estate, There are lots of partnerships like that. And you can buy them on publicly traded companies where they'll just issue, by law, they're required to take all the rental income, split it up, and send it to all the shareholders. Those are not bad deals. I think it's good to have some real estate in your portfolio. It's worth looking at. But if it gets outside of the market and traditional mainstream investing, I'd just be extremely careful, and either make sure you really understand what's going on, or somebody who really understands what's going on. And also realize that the thing about Ponzi schemes, for example, is they're very, very good at convincing you that everything is okay, everything's fine, and that you'll even, some people even make money from Ponzi schemes. Like people talk about Bernie Madoff as if nobody made money from Madoff. Well, think about it like this. Bernie Madoff collected, I think it was like 50 or 60 billion dollars over a 30, 40-year period. And there were people who were making money and they didn't really ask him how he made it. They just would assume he's just this brilliant guy who made these amazing investments, even though everybody started warning them, like, this is not probable, this is not statistically possible that this man is making all these good calls when it comes to investing. And what he was basically doing was issuing false reports by going back and looking at previous days' returns and making himself the perfect stock picker, because he was able to pick from the future, right? If you know what I mean. So effectively, here's the thing. So when Bernie Madoff got busted, this man collected like 50, 60 billion dollars. He only had maybe 300 million in the accounts. He only had 300 million, but he collected 50 or 60 billion. Where did that money go? He spent some of it, sure, but a lot of it he paid out to investors. So there were investors that made a killing investing with Bernie Madoff. In fact, there was a guy who figured out what Bernie Madoff was doing, and he told Madoff, he said, "I'm not going to blow up your spot. Just make sure I know somebody's going to get burned, but you better make sure it's not me. But if you want to get me paid from, whatever, then you can do that." So effectively, that Bernie Madoff situation was something where there were red flags. But a big red flag, I think, on investing is you either have to make sure you understand what's going on, or that somebody you trust knows what's going on. And no matter how good something sounds, you probably shouldn't, in my view. How about this? I'm not going to tell you what to do. I'm going to tell you what I do. I don't put more than 5% of my wealth in any one place. I just don't, because anything can blow up, anything can go bad, and you don't want to lose everything because you put all your money in one place. Even if it does well, you don't say, well, I have 3 investments and one of them is doing really well, so I'm going to sell the other 2 and pour everything into this one thing. You got to be careful about that, because you're breaking one of the most fundamental rules of investing, which is to spread your wealth out, spread your money out. Let's see. Another quote. Rarick says, "Do you think that the Fed will lower interest rates the same way they raise interest rates?" Yeah, I do. It's probably going to take about a year and a half. The market's already pricing that. The stock market is a forward-looking indicator. The market looks at what it thinks is going to happen and then acts based on that. So based on the forward-looking nature of the market, they're expecting that rates will start to go down. The problem is that if I'm not mistaken, they're pricing stocks as if they think it's going to happen this year. I don't think it's going to happen this year. I don't think the Fed's going to reduce rates this year. However, I do think they're going to stop increasing rates this year. And now that I'm thinking about it, if suddenly there's some economic calamity, right? When people start repaying their student loans, if the corporate numbers in the fall are coming in badly, or if there's a banking crisis where liquidity starts to freeze up in the system, I could see them possibly do that. All right. So let's see. Jagan says, "Dr. Boyce, not trying to be argumentative, but isn't Charlie Munger highly concentrated?" That's a good question. So Charlie Munger and Warren Buffett are somewhat concentrated. I don't know about Munger. I love those guys, by the way. They're both in their 90s and they're super smart. And, I don't know how they do that 4-hour press conference every year. It's kind of crazy. But Charlie Munger, I got to look and see where he's invested. He is somewhat concentrated. Like, I think Buffett has maybe 75% of his investments in like 5 companies. And so, that is more concentrated than might be typical. But one thing about those 5 companies that he's heavily invested in is that those companies themselves are pretty well diversified, right? So if for example, you could invest right now in one mutual fund. Like I told you guys, the ones that we use for our $5 a day investing plan, Victor Oscar from Vanguard or SPY. And you could literally make that your only investment. And why is that okay? Why is that still safe, healthy investing? Well, because you're already pretty diversified, because those companies, the thing you're investing in is already diversified for you. So you don't have to necessarily diversify yourself. Now, I want to Google though and see what Charlie Munger is invested in. Let's see. Charlie Munger investments. In case you don't know Charlie Munger, he's awesome. He's like 100 years old, and he just talks crap, and he's great. Okay, the current portfolio value is calculated to be 164 million. No, that's not it. In Charlie Munger's current portfolio, it says his top 4 holdings are Wells Fargo, Bank of America, Alibaba, and U.S. Bank Corp. But I don't think that those are the only 4. The only 4 he's invested in. Let me see what else he's invested. Okay, let's see here. They're showing his top 4, but they're not showing. Okay, let me see if I can find more information. If he's only invested in 4 stocks, I would still be surprised by that, even though those companies are pretty diversified. I see. In Berkshire Hathaway, by having so much money in Berkshire Hathaway, I think Berkshire Hathaway is pretty well diversified. Let's see. I see Costco, Daily Journal Corporation. Let me see here. Let me see if I can see what his. How Charlie Munger picks stocks. By adhering to the intrinsic value principle, Munger ensures that he only picks stocks trading below their true worth, hence protecting his investments and increasing potential returns. So basically that means these guys are what they call value investors. That means that they look for stocks where the market price is lower than the true value of that stock. And so that's pretty simple. But the big debate in finance is whether or not stocks actually trade below their true value in what is called an efficient market. And what that means is, if somebody says, hey, I went to Walmart and I got a $700 TV for just $200, it's possible that you got it cheap, that you got the $700 TV for $200, but it's actually the case that either the TV is defective and it's really just a $200 TV, or there's some sort of special that everybody's running where they all drop the price of that TV to $200 because there's a better TV that came out. So it could be because you're just smart and you pick the right TV, or it could be that there's something that happened that's bigger than just your TV picking ability to determine that, right? So let me see here. Charlie Munger. I'm looking to see. I can't find all his holdings. Now they got an article here about his investment strategy. Let me see what Motley Fool has to say. By the way, I'll subscribe to Motley Fool. I think it's a good place to subscribe to learn about stocks. Okay, and I'm not a paid endorser of the Motley Fool. I just like them. Let's see here. Okay, get off my screen stuff. All right, here we go. He's the vice chairman of Berkshire Hathaway. I don't see. Let's see. Okay, come on. Tell me more. Okay, his investment approach is predicated on the assumption that good opportunities are few and infrequent. He says, life is not just bathing you with unlimited opportunities. Therefore, Munger's process isn't about finding as many good ideas as he can. On the contrary, he seeks to first eliminate bad and mediocre ideas. This might seem like a backward approach, but he often speaks about the value of inverting one's thinking. Munger's preference toward thinking in reverse was clearly illustrated when he said, quote, "It's remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent." Interesting. That's an interesting perspective, right? So what Munger is basically saying is that his goal is to be consistently not stupid, right? He's not trying to be smart. He's not trying to be brilliant. He's not trying to find a brilliant idea behind every corner. He's trying to avoid the mistakes that he sees being made by the public. Now, the downside of that approach, though, is that he and Buffett have missed out on a lot of economic opportunities by sitting on the sideline during major economic booms. I'm not going to say that they're bad investors because they have more money than almost everybody. But I'm going to say that you got to remember, though, that they've had a lot of years on this earth. I think Warren Buffett made one investment of $114 that today is worth, I want to say like 1.5 million or something like that, because he started investing in 1942, if I'm not mistaken. So these guys have been around for a long time. So remember, the number one variable in wealth building is actually time. Never forget that, right? So that's why I want you to go and invest for your kids, because your kids have something, they have an asset, a multi-million-dollar asset that gets wasted all the time, and that is time. So don't waste that time. Get them started. Do the $5 a day investing plan, stuff like that. If you go to the Telegram page, I'll put it up there today. My Telegram channel is drboycetelegram.com. Somebody type that in and let me know that URL is working. drboycetelegram.com. Just give me a yes to let me know that it's actually working when you tried it, because I want to make sure that it redirects properly. But drboycetelegram.com is the Black Investors Group. And I'll put the $5 a day investing plan up there. Okay. Thank you, Aisha. Thank you, Albert. And Chanel, make sure I don't forget to do that, please, if you could. That way I don't, because sometimes I'll say I'm going to do something and it'll slip my brain because I got so many things on my mind sometimes. Okay. So let's keep reading about Charlie Munger. Let's see here. Consequently, Munger doesn't share widely held views on diversification, even holding 10 stocks risks being over diversified in his opinion. So he has a certain theory. I'm going to tell you that a lot of academics disagree with that. But the hard part is that most academics don't have the money that Charlie Munger has. So either they don't know everything, which I think is true. I don't think the scholars know everything, but they do go through a lot of data and a lot of research and a lot of analysis. They can't be discounted. Or B, Munger may have gotten just lucky, right? He picked the right 10 stocks or something, or he picked the right 7 or whatever it is. After all, if good ideas are truly rare, then why would one diversify a portfolio into dozens of things? Munger employs a buy and hold investment strategy. So they do kind of what we do in the $5 a day investing plan, which is pick your stocks and just hold them. Right. And if you pick from the S&P 500 consistently and you just hold your stocks, you don't sell them, you're going to be typically just fine. When he finds a good idea, he simply continues to hold that stock and allows compounding to work for him. As he says, the big money is not in buying and selling, but in the waiting. That's his way of saying that time is valuable. If you just let time pass, and he's let a lot of time pass. That's why Munger has so much money. Okay. Finally, Munger is known to be a value investor. We talked about what that means earlier, basically finding stocks that have a market price that is below the intrinsic value. That's below the intrinsic value of the stock. In his 2014 letter to Berkshire Hathaway shareholders, Buffett credited Munger with changing his perspective on value investing. Buffett quoted Munger as saying, quote, "Forget what you know about buying fair businesses at wonderful prices. Instead, buy wonderful businesses at fair prices." Okay, I like that. Or how about wonderful businesses at wonderful prices? That could work too. I mean, why can't you have extra wonderfuls up in there? Now, let me just say this. The Black community has a lot of great businesses that are underfunded. The Black community has a wealth of opportunity. And I think that if you're in a position to make investments and start businesses in the community, I personally think you'll find that the opportunities are pretty abundant amongst our people. I just hope that everybody else doesn't find out, because when they do, they're going to bring all that crazy capital in. It's going to be a mess. All right, so let's see here. Okay, a few more questions as we finish up here. Alicia, could what's about to happen in the market be because of the AI movement? And yes, absolutely. The AI movement kind of pushed up the valuations of your stocks pretty heavily. So AI is the stocks that got their Christmas early from AI are the ones that are most likely to be hit with what they call a negative catalyst, something bad going wrong and then crashing. And in fact, today might be that day. It looks like it's raining in the market right now. So just be mindful of that. Is it wise to invest in what Eric Fry, analyst, says about the surge? I don't know him. So I wish I could tell you more about that, Alicia. I don't know who Eric Fry is. I apologize for that. Let's see. Option question from Rarick. Can you make more money on a volatile stock? Yeah, when it comes to options, basically options operate mostly on volatility. The more jumpy the stock is, the more the option price goes up. And so in Prime, I talk in Prime about selling the volatility, not necessarily riding the volatility, just selling it, right? Just saying, okay, I don't want to get on the roller coaster, but I will charge you money to ride the roller coaster if you like roller coaster rides. I don't ride roller coasters anymore. I stopped riding those in my 20s. All right, so let's see. Rarick, does the credit card debt affect the stock market? Yes, because consumer spending is the number one driver of the economy. A lot of consumers spend money with their credit cards. Let's see. How do you know when to sell your stocks? When the market is correcting itself? Well, you know what? I don't sell stocks just because it's a correction or whatever. I tend to sell either either after I've had a big rise in certain stocks and I just want to shave some off the top to make sure I'm spread out properly. B, if I need the money, there's what they call a liquidity event. I got to go and buy, I don't know, my wife wants to get the kitchen floors done in the house, or not the kitchen floor, all the floors done. I don't understand why we need new floors. I love our floors. And I was like, babe, nobody has ever come to our house and complained about the floors. But she's like, Boyce, we have to get new floors. They're terrible. They're filthy. We got to get new floors. Well, I love her and she's pretty. So I got to, I want to be nice to my beautiful wife. So I said, okay, let's get the floors done. Well, that requires cash because floors ain't cheap. So, one thing that I did do was I sold a few stocks and I was like, here's the money. Go get your floors done. Doesn't help me though, because I think our floors are fine. Anyway, so you may have something that you need cash for, right? You may or you may have a crisis, right? Something goes wrong and you like having that money back there to back you up. That's you need the little army of dollar bills that can protect you from all the things that can happen in life. Bad things happen and your car breaks down or whatever, right? That's another reason maybe to sell. Third reason I might sell is for diversification purposes. Like during the pandemic, when all the stocks are going up, I said, you know what? Let's get some of this money out of the stock market and put it over into real estate so we can have a more balanced portfolio. Fortunately, we did some of that right before the market just kind of collapsed. So we were happy about that. So we were positioned so that if it kept going up, we would have benefited. But when it collapsed, we didn't lose as much, right? So you have to kind of be mindful of that kind of thing. Whenever things are going really well, I always think about how things can get worse or how things can go bad. And when things go bad, I think about the fact that this too shall pass. And how do I position myself to be able to benefit when things get better? So, for example, with the market declining today, I'm going to go shopping. I'm going to go look for some of those really good companies that I really wanted to get access to, and I'm going to go and buy some of those shares. That's what I'm going to do today. And follow the Telegram channel. I'll send out some stuff and let you guys know some stuff that I've seen in case you want to take a look at it. It's drboycetelegram.com. That's the Black Investors Group. All right, so a few more. K Hitchcock, what's the Telegram sign up? Yeah, Chanel's typing the answer. It's drboycetelegram.com, drboycetelegram.com. All right, so 2 more questions, then we're out of here. I need to speak with customer service related to questions. What is the best way for someone to contact me? Chanel will take good care of you. Chanel's right here in the chat. Chanel, can you respond to this person? Looks like they have a customer service question. In case you guys want to ever reach out to the Black Business School, you have a question or you're trying to get something done. We have a great customer support team. They care deeply about you. They are 100% B1 and committed to the mission. They are wonderful people that I've worked with for many, many years. And so you can email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. Also, you guys know I have a new book. It's called The 10 Commandments of Black Economic Power. You can actually get a 30% discount on my books. You can get an autographed copy, whatever it is you'd like to get. Just go to drboycebooks.com, drboycebooks.com. Use the code word book club, all one word. Use book club, all one word, and you can get 30% off anything in the store. And also, I'd be remiss not to mention that we do make movies and stuff like that because we believe I've told you the things I talked to you guys about are things that we're trying to implement. So one thing we believe is that entertainment needs to be more Black owned. So we actually have, Boyce Watkins Films. We make movies. And so our latest movie is called B1 the Movie. We're doing the world premiere in Atlanta this upcoming weekend, to celebrate Marcus Garvey's birthday. We believe every Black child on this planet should know about Marcus Garvey. And Marcus Garvey is a person that should be right up there with whatever other heroes that they're learning about as kids. So ultimately, long story short, we're going to do the premiere in Atlanta. If you go to B1 the Movie, B1themovie.com, you can learn more about the film. You can watch the trailer. You can check it out. I'm telling you, it's really good. One thing we do is before we release a movie, this is a good little tip for your business. We test it out. We show it to people that we trust. And the first version we showed, it was like, they kind of liked it. They were being polite, but they didn't love it. Right. So we went back to the drawing board. I said, okay, Rick Mathis is the director. I said, okay, let's see if we can do something a little bit better. To look at the music, look at the, re-edit. Let's see what we can do. And Rick came back with something that was just absolute fire. Like the team was like, whoa, this had me jumping out of my seat. So it's that good. It's built like a series and we're super proud of it. So if you'd like to join us for that red carpet event in Atlanta, or if you want to just know about the film and see what's going on, just go to B1themovie.com. And also if you share that link, that would really help us because we We don't have Lionsgate distribution. We have y'all. We have Black Panther Gate because our logos are Panthers. So y'all are our distribution, and we'd appreciate if you shared it with others. All right, so a couple more questions, and then we are done. It's last two. Camellia says, should we buy more today since things are down? I'm going to. I'm not going to tell you what to do. I don't ever tell you guys what to do. I can just tell you what I do myself. When's the red carpet event? It's going to be in Atlanta at the New Black Wall Street. If you go to b1themovie.com, it's all the information is there. It's going to be this weekend, the weekend of, let me see here. It looks like the weekend of the 16th, or sorry, 18th, 19th, and 20th in Atlanta. But I think Rick might even have an event on the 17th. I'm going to do a workshop as well. So you can join me for that workshop. I'm going to teach for about 2 hours. So I don't know what day I think my workshop's Saturday, but they're going to have a bunch of other stuff. Rizza Islam, and a lot of great people are going to be there. All right. So last question. How do you feel about putting money into whole life policies after you have enough money in your emergency fund rather than having money in a savings account? I don't hate whole life policies. I think whole life policies and index universal life, stuff like that, they're better than nothing. That's what I say. I think that they're better. If your financial plan is to spend all your money, well, then that's a bad financial plan, right? You're not going to build any wealth by just spending every penny you have. So just that decision to invest consistently in something that is safe and is going to be a good store of value is a huge step in your wealth building journey. Just something where you're putting something away. So things like even very primitive investment options, like say a susu, that's not terrible. That's better than nothing, right? So whole value life policies are definitely better than nothing. Index universal life better than, it can be beneficial, especially for that person who does not invest at all, because it's basically allowing you to accumulate wealth in the same way you're accumulating wealth for other people by paying your rent every month. You're accumulating wealth for other people by paying your car note every month. You're accumulating wealth for other people by going shopping on a regular basis. All those repetitive actions. I want you to think in your mind real quick about every repetitive financial thing that you do. Everything that you have, look at in your head, think about like 2 or 3 monthly bills that you pay and that you've been paying for years. Rent. Right? Car note. Do you know where your money is going? Do you know what happened to that money? Where is that money? Somebody's taking that money and they're investing that money. And they're probably not giving it away. They're probably putting it into some financial asset that is engaged in compound interest. So I could mathematically show you where if I took your car note for the last 20 years that you've paid, well, you paid $300, $400 a month. Some people are paying as much as $1,000 for car notes now. That $300, $400 a month, the amount of interest that's been compounded off that money is massive, absolutely massive. You've been doing that for 20 years. You're talking about, let's see, I think our $5 a day investing plan is $150 a month. And in 20 years, that accumulates to almost about $100,000. So you think about a car note that's 3 times greater than that, $450 a month. That's $300,000 in accumulated wealth that has occurred that somebody else is getting a chance to get. So what I like about Index Universal Life, shout out to Aisha Verzi. Say your name in there, Aisha, because I want people to know about you, because Aisha will work with you directly. Aisha is a friend of the Black Business School and a sister I just have so much respect for. But she's right there in the Zoom. So Aisha, pop your information in there so people can see you and find you. I like Index Universal Life because that's allowing you to do what you've already been doing for everyone else, except you're just doing it for yourself. You're doing it for your family. You're paying into your family as an entity, as if it's just as important as the automobile company or the car dealership that you bought the car from. Your family becomes just as important as your landlord's family, and that's all you're doing. You're not doing anything dramatically different from what you've already done. The big difference is that you're doing it for yourself and not other people. So Index Universal Life, whole life policies, even though I don't own either one, are great for those who are doing nothing, right? And or maybe just are intimidated with investing, things like that. One thing about whole life that's hard, or in IULs is a little bit difficult, is it when I looked at the chart, it seemed to take a little while for the money to really accumulate significant cash value. And they, when they do the presentation, they show you like how much money you'll have when you're 90 or 100 years old. I'm like, I don't want to make, I don't have money when I'm 100. I don't have money now, So I'm not saying that, but I think it's good to do, because remember, the whole time you've also got life insurance and things like that, death benefits. Everybody should have life insurance. Okay. So maybe doing something like that in conjunction with some other things that might be more exciting will be a fun investment journey for you, because I do believe that with investing, one thing that gets missed is that there are so many non-financial benefits you can extract by being a consistent investor. And I do not want you to forget about all of the benefits you can receive that have nothing to do with money. Like, I run a business, yeah, but I love my business. I wrote the 10 Commandments of Black Economic Power. It meant so much more than just the money. But of course we have to make money. We're running a company. We're trying to do things, right? So when you buy the book, yeah, we take that money, we invest it, we build capital, we're doing all these other things. But if you had said, well, instead of writing this book that you think could transform hundreds of thousands of families in the Black community, Boyce, you can make you can make twice as much money shoveling dog crap in the backyard. I wouldn't want to do that. That would not be fun for me. Do you understand? So I want you to find something that gives you a return on investment that's bigger than the money. My belief is that money is a tool that allows you access to the things that God granted you access to that money cannot buy. I want you to use your money to give you a chance to operate on the frequency where you get those things that money can't buy, like peace of mind, happiness, fulfillment, the joy of various experiences, being close to your loved ones, whatever matters to you. Okay, so I hope that we can agree on that. I hope that didn't sound too vague or esoteric, but it's really me saying that I think you should enjoy your investing, and don't, in my view, I don't think you should let people convince you to do things that you hate just so you can make more money, because then you'll end up hating you're at risk of hating your life, and then by the time you get the money, you're going to be so exhausted and depressed and unhappy that all you're gonna do is use the money to buy drugs or something to help you escape, right? And I don't want you to turn into a bunch of dope addicts. Okay, so just think about these things. I hope that this is helpful to you, and God bless everybody. So good to see you all. All right, so I'm gonna get on out of here. I got to go to another meeting now, but I enjoy this conversation. We do this every Tuesday at 11 a.m. Eastern. So I look forward to seeing you guys next week for sure. I'll check back in from Denmark. I'll be back very soon. And the premiere of the film is in Atlanta next week. It's B1, the movie, B1, THE, the movie.com. And also the Telegram channel, the Black Investors Group. I'm going to send the $5 a day investing plan over there today. So if you go to drboycetelegram.com, you can join. It's totally free. And so feel free to go take a look, drboycetelegram.com. All right, everybody. Love you. I'll see you guys later. Take care now. Bye-bye.